Okay, lastly, we go to our last part of the books of prime entry, so which is type of ledgers. So ledger, or sometimes we call it as a T account. So a ledger is an accounting book that facilitates the transfer of all journals to the individual account. So what we have here, all the journals that we prepared before, everything should be transferred to the individual account. So every financial transaction is recorded on the double entry. So it means that we have one debit and credit. So double entry. At least two ledger account, all right? One for debit and one for credit. And the process of recording journal entries into the ledger is known as posting. So it means that we post from the journal to the ledger. So basically we have three types of ledgers. Number one is a sales ledger, purchase ledger, and general ledger. Alright, we move on to the sales ledger. So sales ledger is a customer account, or the other name is for the account receivable. They are maintained separately for every customer. So it means that here if we have 10 customers, so each individual account we should have, or we should have 10 account receivables. Alright, the purpose of the sales ledger is to provide information about the customer's own money to the business and also the amount involved. Alright, from the sales journal previously, then we are going to post it to double entry in the customer account, sales ledger, or known as a T account, and then the other account will be relayed is a sales account. So our double entry is debit account receivable and credit sales account. So this one, it depends. For example, debit account receivable from Ahmad. So we should have the Ahmad Sendal Berhad. So it means that here we debit account receivable Ahmad Sendal Berhad. Alright, so have a look here. How are we going to transfer to our sales ledger? Alright, so previously I put side by side, so it's easy for us to see. So from our sales journal, previously we have Maju Jaya, Super Globe, and New Season. So and then we are going to transfer our sales account of 14,000. So we have to prepare our sales ledger T account for Maju Jaya, number 1, and then we have Super Globe, and number 3 we have New Season. So basically we debit our account receivable 3,000 here for Maju Jaya, 5,000 for Super Globe, and 6,000 for New Season. So we debit our sales ledger, and then we are going to credit our sales account the total of 14,000. Okay, so this is what we are going to do. So in our sales is a combine of 14,000, because if we do not combine, it's going to be mess of our sales account. Alright, next will be our purchase ledger, or our purchase account is the supplier's account, or the other name is account payable. Provide information about suppliers, the business own money. So it means that the business own money to someone or to the supplier, and also the amount involved. The ledgers are posted from the detail recorded in the purchase journal. Just previously we prepared purchase journal, and then we record it as a double entry transactions in the account payable or purchase ledger and the purchase account. So two accounts involved, debit purchase and credit account payable. Just like previously, if we have 5 suppliers, so it means that we should have 5 different account of supplier. Okay, can we have a look how supposed to be recorded in our purchase ledger? So previously we have prepared our purchase journal. So here we can see side by side. Alright, wet world. So it means that here we debit purchase and then we credit our wet world. So this is our wet world. So we credit 2,000. And then we have Bumi Trading 4,500. So this is Bumi Trading. And then New Era. Alright, New Era we credit off 8,000. Okay, and then we are going to transfer to account purchase, which is 14,500. 14,500. Okay, so we debit our purchase 14,500. So this is how are we going to record in our ledger or the account. So next one, the third one is general ledger. So what is general ledger? It's contain all the accounts other than supplier and customer. So it means that the first is customer and the second is supplier and the third one will be all other account, right? So the simplest form of a ledger is the T account. So specifically the ledgers comprise, so we have revenue, we have expenditure, we have assets, liability, and equities. So all transactions in the various journal will be later posted to the general ledger. So the following only shows an illustration for the transaction from the general journal. So the illustration that we did before in the general journal. So we can see here from the general journal, we have building, motor vehicle, cash at bank, and cash in hand. So this is all assets, so we are going to debit each of the individual account. So here, building 100,000, motor vehicle 40,000, machine 40,000, and cash at bank is cash at bank is 15,000. Okay, all right, we continue with cash in hand 10,000, and then we credit our liabilities 60,000, and then our credit our loan from SME bank 20,000, and then we are going to credit our capital 95,000. So each of the individual account we should have our debit and our credit. So that's all for our books of prime entry, and we posted to our ledger. Thank you.